Thank you.
Thank you very much, Commissioner. The Commissioner will now be available to answer some of your questions on this, and of course, as a further reminder that we will still have the technical briefing afterwards, so for the questions on the number of coffee grains in a venti, we will keep that for a little bit later. And I saw our Spanish friends front and left have been asking before. If you can start, please. Thank you.
Hi, Commissioner. It's going to be two short questions. First of all, I would like to know why, what was the reason, because you have decided to give a concrete figure, 20 to 30 million for each company, because I think that this is not normal. Normally, you only give the general guidelines to recover, to collect the money back. And second of all, I would like to know how do you think that there will be a change of behavior by these kind of companies, taking into account that the figure that should be collected is really minimum, is short. The net earning by Starbucks last year were, if I not remember bad, it was around 2 billion and they only have to pay 20 million. So do you expect that there will be a real change of behavior from these companies?
Well, we have made a choice here. In the decision, we devised a methodology as to how to calculate in a more correct way the actual profit. And then we give, for information purposes, a range as to what the recovery would be. I agree with you that, that these are not spectacular sums, but basically that's not the message here. The message is the principle that tax authorities cannot endorse transfer pricing which is artificial or have no relationship with reality, because that's the core of the case, that a standalone company, they have to rely on market prices. They cannot make up prices. They have to rely on market prices. And that is why you find the advantages for group companies who here has artificially invented prices which has no relationship with the market. And one can have different, of course, evaluations of the amount. But of course, what we can see is that a lot of trouble was taken to save this amount of money. And I do hope that it is a clear message, of course, not only to companies, but also to tax authorities, that these are the two first cases where decisions are taken in this mandate, but we have ongoing investigations, and as I said, there may be more investigations to come if we have indications that European rules of state aid are being twisted.
Thank you. Yun-Chi.
Hi, Fu Yun-Chi from Reuters. Commissioner, can you give us any idea of when we can expect decisions on Apple and Amazon, and can we expect the same size, the same magnitude in the back taxes to be recovered? Thank you.
Well, you know, I learned it the hard way about deadlines. So what I can tell you is that we will take decision when the cases are ready for decision making. And these are very different cases and will, of course, be assessed on their own merits. So the outcome today do not in any way prejudge the next decisions that we eventually will take.
Yes, please, front center.
Yes, thank you, Diego Velasquez, Luxembourg and Starbucks. I wanted to ask if, with the new rule on the automatic exchange on tax rulings, you expect many new cases to emerge, because I can imagine that there were hundreds, if not thousands, of such cases in the past in Luxembourg. And how and with which severity will you proceed in the new cases that might emerge when this rule will come in? Thank you.
Well, of course, it's a balance. I very much like being Commissioner of Competition, so I don't want to be tax chief. We cannot and will not redo any decision taken by tax authorities in member states. We do our casework when we find that there is a risk that our EU state aid rules are being twisted or violated, or things are going on that's illegal. We'll see if more cases come. Of course, we are very much aware, and we have a ongoing activity in looking into how do member states in general use tax rulings. And that is why I think it is quite open what will come out of the automatic exchange in terms of cases, because we're not done with analyzing the material that we have gotten now from all 28 member states. But what we see is that some member states, well, they do a very solid job. They have the right kind of reporting underneath their tax rulings. The transfer pricing are done at arm's length, which means that they have a relationship with what would have been or could have been market prices. So it's not necessarily so that exchange for information reveals a lot of wrongdoing, but it will help in the future tax authorities to get it wrong in every corner of Europe where a company is active. So it still remains to be seen. What we are aiming at is, of course, a much more transparent way of do taxation, so that we neither have double taxation nor double non-taxation.
Front left again.
Lucía Avellán, El País. In this decision taken today, what's the punishment, so to say, for governments? Because they are responsible for offering such schemes to companies, and yet they get back the money that they are fined now because of your decision. So what's the deterrent part of this decision you're taking today for them?
In the state aid work, basically we do not work with punishments. It's a very simple rule. If you have granted a subsidy or given fiscal aid and it's not legal, then you have to recover to reinstate a level playing field. I don't know how that feels in governments around Europe. I think you will have to ask them. But I would think if it was in my previous position, I would be somewhat embarrassed if there was a negative decision that my country's tax authority didn't get it right.
Front left. Still, yes. No, right at the front, yes.
Ivo Caizzi, Corriere della Sera. If Luxembourg, for example, get back 30 million from Fiat and the Netherlands get 30 million from Starbucks, do you think it's fair, considering that this money should have gone to other member states where the profits were made? Don't you think that it should be put in place a legislation that give the opportunity to compensate the country that lost an enormous amount of revenues due to the behavior of countries like Luxembourg, the Netherlands, Ireland, and the other tax haven? And the second question, if I may, since it seems that the President of the Commission for many years has been the only one that was not aware that Luxembourg was a tax haven, and he was insistently denying that, what do you think is the credibility of a politician that didn't realize or was denying what was going on in a 400,000, 500,000 people countries where almost everybody knows what's going on in very delicate and important field? And can he remain as president of the Commission after you demonstrate that Luxembourg was and is a tax haven?
Well, on the question of whether recovery ought to be distributed to countries where profits were made in order for them to be taxed there, I do understand your line of thinking. Actually, here we are talking about getting sort of profits back to the countries Luxembourg and the Netherlands in order to tax them there where activity took place. It is very, very tricky, I think, in general, to figure out what should be exactly, looking backwards, the amount of tax pay being distributed to member states. But I think that if we can work with member states, with European Parliament, with the OECD, looking forward, then we can achieve a situation where revenues are taxed where values are actually made. And I think it is very important to focus all our attention in doing that, because it's not easy. There will be obstacles, there will be time-consuming discussions, all kinds of things can happen. But if we concentrate, it can happen. And I think that will be the best situation, that we, looking forward, gather all our forces in order to make sure that profits are taxed where they're made. And I think that is where we should put our effort. On your second question, I don't think about that. I try to do my job as good as I can.
Right behind, yes, sir.
Christopher Ziedler, Stuttgarter Zeitung, Germany. Also two questions, if I may. On the, you just said yourself these were not spectacular sums, but are you confident that this is sort of the whole amount of what these companies have saved on taxes, or may there be more to come? Because indeed, if you read all the what has been earned on money, it doesn't seem like a big amount. And the second question on the tax on the automatic exchange. Can you tell us how disappointed you are that the exchange will only happen between member states, and that the Commission will only receive anonymous data? That might make it harder for you to really open state aid cases on the information. Thank you.
Well, the work that we have done, it has been. It is very complex. It's very deep in the ways of trying to understand what goes on. So for this company specifically, Fiat Finance and Trade and Starbucks Manufacturing, well, I think we're pretty close in saying the range is between 20 and 30 million euros. And I think the relevant comparison is what taxes has then been paid by Fiat Finance and Trade and Starbucks. And as I told you, they have paid less than 0.6 million or less than 0.4 million. So even though a figure of 20 to 30 million are not spectacular, it is still much, much more than what has previously been paid. And I think in that perspective, it's important. And I think it's important also, as I said, as a matter of principle. Because in the decisions, we decide or advise on a methodology to be used to get it right. And it is there, and it is to be used. And when we have done some more cases, we can be even more precise on the guidance to member states. Second, since we're the Commission and not the European Tax Authority, I think it's not that important if we get the detailed information. Because anyway, if there is a complaint, if there is a hearing in the national parliament, as there was in the UK, which gave rise to one of these cases, then of course we can pick it up. Which means that even though we don't have the details of any case going into the Commission as such, we can still do our state aid control as we can today.
Matthew?
Commissioner Matthew Newman from MLEX. Just wanted to get to your comparison that you just mentioned. In the press release, you talk about selective tax advantages for these companies. And one of the main pillars of state aid rules is selectivity. And that's important because you need to compare two situations and try to determine if the same legal and factual situation is there. So if I understand from your comments today, what you were looking at in part was how these big multinationals were taxed and the rulings against for them versus what's available for a small, let's say, startup that is facing real costs and is in the market. So you found that when you look at those situations, it's obviously to the advantage of the multinationals and not to the SME. And I'm just wondering, under your when in your evaluation, how do you compare a multinational, which has different groups all over the world, and an SME? Because it doesn't seem like apples with apples. And then the other question, if I may, is simply why these cases? It's you've raised the question about the amounts, which are minimal, but are these the most egregious cases that you uncovered? Are these really the worst ones? And this, when you want to have these as an example for other multinationals, is this sort of the poster child of the bad tax avoider, the tax cheat? Is that what we should think of when we think of Starbucks and Fiat?
Well, first of all, you're right. This is not apple and apple. We get to apple when the decision is ready. There are, of course, all kinds of differences between even a big standalone company and a multinational or a holding where you have different companies within the company. So there will be numerous differences in the way they compete, obviously. If you're a startup, you have to make your way into the market. If you're a very established brand, well, there you are. So what we do is to see, well, on the very basics, as to how to make sure that you pay your fair share of taxes, is your taxable profits being calculated. And we work with the principles of, we call it arm's length, which means that a transfer price must resemble something that you can find in the market. Because a standalone company, if it's a coffee roaster, they have to buy their green beans in the market, and they have to take the market price. And when they sell off their roasted beans, they have to sell them at the market price. Therefore, when you see a roaster within a holding company, when they buy the green beans, the price has to resemble something that you can actually find in the market. And when they sell off, well, you have to find something which, one way or another, would be recognizable, talking about the royalty payment. And in that, well, yes, we can actually do it. Also, when it comes to the Fiat Finance and Trade, by principle, the way that they argue is not wrong in that respect, but the definitions that they use, that they put into their methodology, is highly questionable, which is the reason why they today get a negative decision. On the second, these two cases have a different prehistory. One came out of hearings in UK, in their parliament. Second came out of a very early request from tax rulings in Luxembourg, which dates back a couple of years before the LuxLeaks, where the name of Fiat Finance and Trade came through in the material, and therefore it was taken up by the Commission. So therefore, I don't think that you can say that these are the poster childs of bad taxing behavior. These are examples of what is not right. And therefore, it's also therefore I highlight the principle of the two cases, that this is about getting transfer prices right, so that you pay your fair share of taxes as well as anyone else, and in particular, as well as a standalone company who cannot enjoy the benefits of being within a holding. And therefore, I do hope that there is food for thought in companies in Europe, at tax authorities in Europe, in these two decisions. And I hope that in the methodology that we put in the decisions, there will be not only food for thought, but also ways for action.
Nicholas?
Hi, Commissioner. Nicholas Hurst from Politico. I have a question. 1 year ago, the LuxLeaks gave people around Europe the very strong impression that there were hundreds of questionable tax rulings that were handed out in Luxembourg and and by analogy in all sorts of other European countries. Two investigations you just concluded now, are you comfortable that these particular rulings, were exceptional cases, and that the tax ruling system in those two countries is sound? Or do you have any doubts in your mind about the way that those countries hand out tax rulings on a wider basis? And a second question, do you have any plans to issue guidelines or guidance to companies going forward about how they can strike these tax rulings?
Well, I think as a matter of principle, it's impossible to say precisely if everything is the same as what you have actually looked at, or if everything is different as to what you have actually looked at. Which is, of course, one of the reasons why we try to get a more sort of horizontal overview as to how tax rulings are being used. And also between Luxembourg and the Netherlands, we see differences in how tax rulings are actually being used and the methodology used and how they approach it. As I said previously, we have a couple of ongoing investigations as well, and they will, of course, show more about the state of tax rulings in the countries involved. So that's impossible to say for now, but I think it is important for countries, and of course not only the countries here in question, but also for other countries to consider if they're on the right track. Second, I think there is a lot of guidance to take from the two decisions today, because we advise on a methodology to be used. And when we have done a couple of more cases, I think then we can do more broader guidance to member states, and eventually in the future we may be able to do guidelines. Guidelines is much more challenging and they have a much more binding nature, both for us and for member states. So I think it's very important to get started and for member states to start using these two decisions and also to use the guidance that we can give with the experience that we have now when the services has been deep down in the technicalities and the complexities of transfer pricing.
First Christian, then far left.
Christian Oliver from the Financial Times. Can you just explain to us what precedent are you setting today with the Starbucks case in terms of the IP and the royalties paid? Because the Dutch will insist that there's an accounting system agreed under the OECD under which these things are agreed. How are you mapping out today? You talked about finding a market value for those kind of transfers. How is that done? What should other companies that are booking those kind of royalties elsewhere derive from today's decision? Because you're not, as far as I understand it, saying there should be none of this, but just that it should be done at some kind of market level. Could you just tell us what that means?
Well, first of all, I think one of the important takeaways is the fact that it is possible to price IP. And I think that's important. Second is that what we have done concretely in this case is to get information as to what have happened in similar situations. Has there been a royalty for using the know-how as to how to roast coffee? And in similar situations, we have found no such royalty. You may find a situation where there is a royalty, but then it will not be in the similar situation, because this is what we have been trying to do, of course, trying to find something where we can compare, to compare the same with the same and see, is there any difference? And here, yes, we found a difference. There was a substantial royalty paid that was not paid by other roasters. It's, of course, very tricky. And all kinds of royalties are being paid, also within the Starbucks company, that we do not question. And therefore, I think it is very important to move forward on, as far as we are now, on a case-by-case basis, but use the general takeaway that it is possible to do pricing of IP and the use of IP.
So on the left, I would ask you to be brief, as we're into the last 5 minutes, and then we'll have to let the Commissioner go, unfortunately.
Hi, my name's Catherine Fiore. I'm from EU Reporter. You've highlighted the importance of working with lots of people, the European Parliament, businesses, etc. You left out an extremely important group, whistleblowers. These are extremely important, particularly in cartels, the movie-loving members of cartels, where whistleblowers play a particularly important role. But I'd also wanted to know if you'd like to comment about the current situation with Antoine Deltour in Luxembourg, where he's still facing charges for whistleblowing, and can the Commission produce any further guidance to countries on the importance of whistleblowers?
Well, I don't know if we can provide guidance, but I can say that it is very much appreciated, and it was an omission and it is my fault, because you're absolutely right to say that we need people to come forward if they find that things are not as they should be. As I have said previously, we use the information coming from the LuxLeaks as market information. We can take it on board as any other information. And therefore, of course, it's important. I am not the judge of the rules in the individual member states, and therefore it's not for me to comment on that. But you're perfectly right to say that, yes, whistleblower also plays an important role here.
James?
Thanks, Ricardo. Hi, hello, Commissioner. Just a quick question on some conflict of interest issues here. The letter in the Starbucks case was sent to Mr. Timmermans, who was the foreign minister of the Netherlands at the time. He's now the deputy head of the Commission. The case concerning Fiat concerns Luxembourg, where Mr. Juncker was the leader for a very long time when these tax rulings came about. Did either of those members of the Commission recuse themselves from the decisions that were taken today? One might draw the comparison with some other jurisdictions, legal jurisdictions, where recusal would perhaps be routine in such a case. Also, could you expand a little bit on the Belgian cases, which number around 50, I believe, and could also be on your calendar in the coming months? Thank you very much.
Well, first of all, the decision was taken in written procedure at 8:30 this morning, so there was no need to make excuses. And second, on the Belgian case. The Belgian case is a little different because here we investigate a scheme of excess profits. And I think the very, very simple version is that in the scheme, if you are a multinational, you are allowed to say we have additional profits just from being more than a standalone company, and they should not be taxed. And that, of course, makes us concerned. No conclusions yet, of course. We are taking on board information, but this is what we're looking at. And also on that, of course, I have no timing. When the case is ready, we will take a decision, and you'll see me.
Gaspar? No, sorry, Gaspar, and last one for you then.
Yes, Gaspar Subag with Bloomberg. Hi, I have a question. I know what the rules are in state aid, but I wonder what you think of them. Do you think it's fair that Netherlands and Luxembourg get a tax refund in this situation? Yeah, thanks.
Well, I think it's fair for the taxpayers of the two countries. Because if more money comes into the budget, well, I think it is only justifiable for the taxpayers in Luxembourg and the Netherlands. And in that respect, I think it's perfectly fair that taxes that have not been paid due to illegal state aid are being paid. And I think that's good for the citizens in the two countries because they are taxpayers as well. And they probably feel that they pay the taxes that they're supposed to pay.
Tom?
Tom Weingart, German Radio. Just one short question. Do you expect member states in the future to notify all tax rulings now?
Well, no. Because I expect tax rulings to be by the book, that they do not contain state aid, because this is no place for state aid and the selectivity involved. As I said, tax rulings can be perfectly fine as a tool to create legal certainty if the content of the tax ruling is by the book. And with the two decisions today and the methodology that we advise on, well, then you can do tax rulings which are perfectly fine, as do a number of member states, as we have seen in our general queries, that there are tax rulings which are just by the book, very substantial, backed up by data and facts which are unquestionable.
And one last question to the lady in the left there. No, on the left, sorry.
Hello, my name is Michelle Sinner. I work for Lutzbeiland in Luxembourg. The Luxembourg finance minister, Mr. Gramegna, has just tweeted that Luxembourg doesn't agree with your decision and reserves all rights. So my question to you is, how quickly does Luxembourg have to react to your decision? Can Luxembourg appeal? Can the state appeal against it? Can the company appeal against it? So, for instance, can Fiat take direct action? And if Luxembourg establishes a new tax bill for Fiat, how do you decide whether you're satisfied with it or not? Is anything in between 20 or 30 million good for you? Thank you.
Well, the next thing that is to happen after a negative decision is for the member state to follow the decision, which means that they have 2 months to do their own calculations and to start the recovery. And we have a procedure for doing recovery in order to get it done. Of course, member states and businesses, they have their opportunities. This is a union of law. So, of course, maybe we'll see each other in court, but otherwise it's a 2-month period for the member state to do their calculations.
Thank you. And now all that's left for me to do is to thank Commissioner Vestager for her presence, and the background technical briefing will start shortly afterwards. Thank you.
Thank you. I can't remember 2 questions asked on the road.
Yes, I